right, good afternoon, everyone, and welcome to today's webinar. We're excited to have you with us. It's now noon. Once again, we've got an engaging session lined up for you today. This webinar is proudly brought to you by a real estate investor in conjunction with Highstreet Auctions. And I'm Neil Peterson, founder of REI, South Africa's leading independent platform for real estate news and investing education since 2007. So I'll be your host and moderator today as we explore a topic with direct relevance in the property market that has an impact on businesses and individuals across South Africa. And it really is the role of auctions in business rescue, asset disposals, and in particular in the real estate sector. So at REI, we're dedicated to empowering investors, property, and business professionals through our digital platform, rei.co.za, our award-winning monthly magazine, Real Estate Investor, and our regular live webinars and events. And today, we're even taking that commitment even a step further. So before we jump into today's session, just a quick bit of housekeeping. Recordings, if you've registered for today's webinar, we'll send you a link to the recording after the event, and you can also find the recording on our website, on our homepage, rei.co.za, or under the events or webinar section. We encourage you also to engage with us today. So please submit your questions at any time during the session using the Q&A box located at the bottom right-hand side of your screen. And we'll make sure to answer as many of your questions as we can at the end part of the webinar. Now, let's get into today's webinar theme. It's called Unlocking Property Value in Challenging Times, the Role of Auctions in Business Rescue and Asset Disposal. And today we'll explore how auction platforms like Highstreet Auctions can unlock property value during times of economic distress. And as many businesses face financial pressures from market downturns, turnarounds, restructuring and insolvency, also known as REI, auctions are playing a growing role in offering a fast, transparent, and effective method for asset disposal, ensuring maximum returns for distressed properties and assets. And today we'll showcase the auction process as a vital business tool, how we can unlock liquidity and also navigate economic challenges. So without further ado, we're thrilled to have our three esteemed panelists today who will provide deep insights in today's topic. First, I'd like to introduce you to Greg Dart. He's a director at Highstreet Auctions. Greg, thank you again for being here with us today. Could you please officially introduce yourself to the audience?
Thank you, Neil, and thanks to the audience and my fellow panelists. It's again a great privilege, Neil. Thanks for the invitation. Well, you've actually done it for me. I'm a director at Highstreet Auction Company, actively looking after the operations of the organization, and privileged and lucky to have a team like our turnaround, restructuring, and insolvency business division, headed up by Kelsey, joining me on this journey and part of this panelist discussion today. Thank you so much.
Wonderful. Great having you, yes, as usual, Greg. Next, we have Gideon Slabbert. He's a director at Corporate Business Rescue, and he's a certified business rescue practitioner, and he's also the Chief Operating Officer of Turnaround Association of South Africa. So, Gideon, would you like to introduce yourself in more detail to the audience, please? You just unmute yourself there, Gideon. It's normally something we forget. You're back on.
I see it's 4 minutes past 12, so it's officially good afternoon, everyone. And my fellow panelists and Neil, thank you for inviting myself to attend to this webinar and to have some interesting discussions with all the fellow participants. As you mentioned, I'm a director of Corporate Business Rescue Advisory. We are a boutique business rescue firm only dealing with business rescues, and also a board member of the Turnaround Management Association of South Africa. Yeah, looking forward to this webinar. Thank you very much.
Wonderful. Fantastic.
Neil, can I jump in quickly? And I must just say thanks to Gideon. I know how incredibly busy they are. We had George Nell on our screen a bit earlier today, just saying that the team is inundated with business. So I suppose that talks to the state of the economy and the challenges we face. But they're busy with business rescue proposals, and they're very busy presenting to stakeholders over the next few days. So thanks, Gideon, for your time.
No,
Thank you very much.
absolutely. Thank you. Thanks for adding that, Greg. I think important point. And last but certainly not least, we have Kelsey Barlow of Highstreet Auctions. She heads up the TRI Legal and Development Division. Kelsey, thank you once again for being part of our discussion. You also want to introduce yourself to the audience?
Well, thank you for having me. Good afternoon, everyone. Yeah, so as Greg did the honors of introducing me, I am the head of the turnaround, restructuring and insolvency asset disposal division at Highstreet. So our division specifically only deals with distressed assets and, navigating the complexities of those sales. I'm a qualified paralegal. I'm currently enrolled in the SEREPA insolvency course, just consistently trying to develop our expertise so that we are as up to date and as relevant and as well fitted to guide, these deals and sales and transactions during difficult times.
Absolutely. So thank you very much to all our panelists for the introductions. It really is a privilege to have you all here today. And I think making the point about the economy, and I just come back from a conference last week listening to a lot of politicians all saying it's all about the economy, but we all need to do something about it. But certainly you are the guys who have to deal with the businesses that are not doing so well in these times when the economy is not doing so well. So let's dive into the discussion today. We're going to start off with Gideon. And you're the specialist. I mean, in the context of, let's call it TRI, which is turnaround, restructuring, or insolvency, what are the critical legal elements that businesses and creditors should be considering when choosing auctions as a disposal method?
Yes, thank you, Neil. I think in this webinar, I'm going to constantly refer to a Project X, which is a current case study in our offices. And just to give some background or context, it is a property portfolio with replacement value, calculated to be 3.2 billion rand. Billion, not million, just in case my M and B sounds don't come out that clear. But interestingly enough, that's always the business's view. And when you are appointed as a practitioner or a turnaround practitioner, over a property portfolio, then it always comes back down to, what is the current occupancy and what is the cap rate applied and what is the market value. And, there's always with the market value, there's a fire sale value linked to that asset. In all instances, or in most instances, you are always challenged by stakeholders, being the secured creditors or bondholders and the shareholders. When you look at the annual financial statements, you would see that your property has got an X value, and it is usually a value that is higher than what the calculated market value could be. I'm not saying this is always the case, but it's, often what we find in property companies. So what we specifically see after COVID is, interestingly enough, the companies, we find that companies are more resilient, but we also find that this interest rate hike, or not hike, but the high levels of interest rate over the past year, specifically, has really placed its a onerous obligation on a company. And although, commitments have been made, in certain instances, the basic secured installment, equals the cash levels. And also, the load shedding we see had a significant impact. The cost of diesel and generators is reported to be 10 times the cost of municipal charges. Don't quote me, but that is what we see in this market. And then your operational cost. We've been involved with the four banks and or the four major banks, and all the specialists have considered the portfolio and provided insights. And the general view is that operational cost a commercial property, depending on which area. But in general, a rule of thumb is that the cost should be 35%, of the revenue. And in a lot of instances, we see that the operational cost can be more. Also the cost of your service providers have increased. So all of these aspects actually lead to a portfolio being distressed. Now, what are your options when a portfolio is distressed? Yes, a company can, go to the banks or the secured lender, and they can try to negotiate or renegotiate the terms of the loan, make it more affordable. But a lot of the times, or most instances that we've seen, is that your rental income is ceded to the secured creditor. So in the case that you are really in distress, you need to know what have you provided as security, what have you ceded, and how will you engage with your secured stakeholder going forward. And that is, where the business rescue also comes into play. A proper business rescue practitioner, or one that, has got a good stance in the market, would consider these options, and also in a pre-assessment with a company, take into consideration what is it that the banks, would accept in a proposal. And then also in this pre-assessment, the question should be, what is the outcome? What is the way forward? Is it just a sale? Or in the Act, section 128 of the Companies Act, the objectives of business rescue is stated there. The one objective is to restructure the financial affairs, business and property of the company to ensure continuous trade in a solvent and liquid manner. Alternatively, if the first objective cannot be achieved, the second objective would be to provide for a better return than in liquidation to the affected persons. So if you do a trade-out scenario, or if you plan for a trade-out scenario, you need to take all these factors that I just mentioned into consideration, and see, can your asset make it, and what is required for your asset to make it. And that is where the legal restructuring comes into play. And if that is not an option, then the asset should go to liquidation. Now, I'm sure Greg will comment, but it is just a perception in industry and in the market that when at least my view, but when the name tag of liquidation is linked to an asset, then that asset's value just automatically loses a certain percentage of its value. And that is why business rescue is a good tool to actually retain that value, because you're sort of in the midway, and you can publish a plan that can deal with your creditors legally, and come with a better outcome and see the company or the portfolio continue its existence rather than just selling it. And also, one of our greatest challenges is the engagement with the municipalities. One must also, in this whole assessment of the portfolio, understand where are you with your portfolio, what amicable arrangements can you put into play with the municipalities to ensure continuation. Sometimes you really get assets that have just deteriorated, or the financial position has just deteriorated to such an extent that perhaps a liquidation is better, especially if you take into consideration section 118 of the Municipal Systems Act, and what price tag is on a clearance certificate.
So in the context of what you've set in terms of the scene, I mean, we're talking about interest rates going up, we're talking about load shedding. So a lot of businesses are under severe pressure over here. So, so Greg, I want to come to you now because it's so important. I think Gideon set the scene so nicely in terms of why businesses are getting in trouble, and the options that they have. So let's look at the auction process. How has the role of auctions in property disposal evolved over the last decade? Because it has changed, and it's certainly come back onto the radar again, especially in the context of the economic challenges that we have had in the recent years. Can you maybe just share that with us?
Neil, thank you. I was just making sure I was unmuted.
All good.
Thanks, Gideon. Yeah, you certainly provided a number of talking points there, and something that we can certainly, develop further. Neil, you talk about the fact that auctions have evolved. I think there has been evolution, but I think fundamentally auctions and the principle of auctions have been fairly consistent. But there's no doubt that over this period of economic challenge, and this is all the way back to the 2008 recession, all the way through COVID, global and macroeconomic challenges that we've had, as much as our local challenges with the energy crisis and so on, that this has amplified the need for our auction platform. We've certainly seen the profile of auctions being elevated, and I'm quite confident, and we're seeing it in the marketplace, that the auction platform has become a cornerstone of many of our sellers' disposal platform mix. So, why? And I think, one of the things that we've seen as a consequence of these challenging economic times is market uncertainty. We've certainly seen economic downturns. There's an impact on price and volatility of price of asset. And I think a lot of sellers, when there is this volatility, would look for a quick exit. They don't want a prolonged exposure to this volatility. So auctions allow that. They adjust. Our auction platform allows for a quick, transparent process to dispose of an asset. So, you mitigate against that volatility. And as much as you've got volatility, more often than not, in these economic downturns, you see declining property values. And by association and as a consequence of that, decreased demand for property. So, auctions also provide a mechanism to diminish that impact by the fact that you bring a lot of buyers to the floor, and that competition typically unlocks more optimum pricing in the marketplace because of that competitive bidding environment. So that those two things talk to the market uncertainty. There's no doubt that Gideon will tell you that you're seeing increased financial distress. Both George and he are seeing the market requirement for their services increasing every day, which is a sad consequence of this. But as businesses enter into these insolvency proceedings, liquidation, they need to sell off assets. They need to sell off property. And we certainly, again, because of this competitive bidding, provide a higher price point than traditional sales. And it benefits creditors, sellers, and buyers. It's also very transparent for distressed asset sales. You can sell a distressed asset during this time efficiently under the financial distress scenario that they have. You also spoke about tightening credit, Gideon, stricter lending conditions. And there's no doubt that these high interest rates have meant that there's less liquidity because of stricter lending conditions. And auction is predominantly a cash transaction. Yes, there will be some debt that might be raised on a transaction, but you're looking at an alternative to your typical finance-driven sales on auction. Most of our buyers are cash buyers, so they don't have to go to your traditional bank loans. So the tightening credit market has less of an impact on us because of the auction platform being a cash-based transaction platform. We also know that because of tightening credit and stricter lending, you're probably going to have some bond defaults and debt recovery. Banks are trying to get recovery on indebtedness, delinquent borrowers, and it's great that auctions offer a quick cash sale, and it provides a solution to these financial institutions looking at non-performing loans. And I think probably just picking up on all of Gideon's points, and I hope I didn't miss any of them, but the other thing is inflation, rising costs. There's no doubt that inflation has had an impact on the cost of doing business. You've got increased costs in construction, labor, maintenance. So you probably find the big portfolio owners, or even anybody that's owning property, it's becoming more and more difficult to maintain or develop their assets. So more often than not, they'll look at a platform to dispose of non-core, a way to dispose of unwanted or underperforming assets before those costs escalate further. And then, of course, on the flip side of that is the inflationary pressure on our buyer. Cost of living, affordability. So perhaps buyers are looking for, and you use this bargain discussion and we'll develop that further, but buyers will come to market and perhaps look for distressed assets on the market and see if they can get a better value for those assets on auction. We'll talk about how we mitigate that to make sure you still get the right sort of value as a business rescue practitioner. But those are I think my initial comments to
Absolutely, no. Very important. You both set the scene very nicely. And, we've also got the MPC sitting tomorrow. We know we're hoping there's going to be a 0.25% reduction. Because what I picked up is certainly listings are down in the market. And I think auctions are doing very well exactly for the reasons why you've explained, both you and Gideon. So thank you for that, but we'll see. So Kelsey, I want to bring you here because from your experience at Highstreet, I mean, what are the key advantages you see to use auctions over more traditional methods of property sales, especially when dealing with distressed assets? I have a few in my mind already, which I'm sure you'll probably just confirm, but I know you're going to add a lot more. Do you want to share that with us?
Yeah, absolutely. I mean, auction, the methodology of sale of auction is gaining popularity across the board, not only in distress sales. For distress sales, the reason why it's a preferred method over the likes of your private treaty is that it's time, it's got a timeline, it's got a deadline, it's result driven. So it's speedy and there's certainty of the sale. You are taking it to the market and it's a call to action. It's a call to action to get that asset's value, realization of that asset's value, and make sure that you're able to provide liquidity, whether it's a liquidation. Obviously, liquidation, there's a level of urgency to bring liquidity into the estate or the matter and to settle the creditors that are due what they due. However, with business rescue, it's a little bit of a different situation because we are then in a business rescue setting, we are mandated by the business rescue practitioner. It attracts a reserve price. There's a clear indication of the kind of value that asset carries. Also, auctions probably better because we take a select number of properties to auction. You've got a dedicated sales executive focusing on bringing the right buyers to the table. Whereas your conventional sales methods, you've got a broker that's probably sitting with 20 or 30 properties on their books, and what comes and what doesn't. We've got very, very extensive marketing strategies so that we expose that asset to anyone and everyone we could possibly reach in terms of making sure that the right investors are seeing that the asset is on the market. We're bringing them to the table. We're getting them to submit an offer. It's also auction conditions, sales of conditions are the best because they protect the seller, and often in liquidations where banks, there's very clear conditions that need to be set out. We need to obviously make the necessary disclosures in terms of what the buyer is responsible for. Are there any debts that the buyer needs to take into consideration when purchasing this asset? Are they responsible for the COC certificate, or is the liquidator responsible? We able to at least set out the contracts and the conditions of sales that outline the conditions so that there is no uncertainty in the transaction. There's also the highest bid, it's definitive. That contract, once that hammer's knocked down, your highest bidder signs a contract. It's non-suspensive. It's not suspensive to a DD. It's not suspensive to raising finance. So it's a very clear transaction. Both the buyer and the seller know what needs to be done in order for this transaction to be finalized. So I think that's why auction has the standing that it has with distressed properties and why we are able to get such positive results when it comes to the realization of the asset and selling that asset off.
Great. Thank you for setting that scene as well, Kelsey, and for clarifying that. Such an important point there. Gideon, let's get into some examples. Can you maybe share some examples of businesses that have successfully utilized auctions for asset disposal? And you also see businesses and various other property assets and that kind of stuff going through periods of financial distress. Can you maybe just share some that's worked really well from your experience?
Yes, thank you. I think before I just answer that question directly, just as a matter of interest, and it's quite astounding statistics or figures, but in 2020, if you go and look on the FNB website, the interest rate, and this is now when COVID started, in July 2019, prime interest was at 10%. And that went down during the COVID period. The lowest was 24 July 2020, went to 7%. And, that gradually increased. Now, we all know that during that period, there was a lot of properties which were financed and transactions. I think the property market experienced a boom at that time, listening to or looking at the news. And then that gradually went up, where we ended up at the highest in May 26 May 2023, it went 11.75%. And it has been gradually going down ever since. Now, just as a matter of interest, the highest interest rate which I could see was actually, and I believe this is the recession period, the interest rate seemingly went up in 2008 to 15%. So, that is when there's a significant shock or something wrong in the system. So, affordability, everything was fairly average, but affordability during the past 4 years was definitely difficult. And I like what Greg said, he's got a lot of cash buyers. And, the property market is quite, I think, simple, or the maths behind a property portfolio is quite simple. You've got your income, your expenses, and you've got your cap rates that can give you a market value. And as soon as if your gearing is incorrect, then you are in trouble of your portfolio, and you need to seriously look at restructuring the portfolio. In terms of what we see in the business rescue space, and just touching on what Kelsey also mentioned, is an auction is a definitive process. It's we refer to it as a sunset clause. If all else fails in the restructuring efforts, you've got your sunset of an auction. And I was just thinking, as Kelsey and yourselves were talking, I think 3 examples that I was involved with, is a 17,000 square office space in Centurion, which went on auction, and it got approximately 60%. It achieved a 60% of the calculated market value at that time. Everything was signed, deposits were paid over, and then the challenge was the clearance certificate from the municipality. There was a constant battle to get that, and that eventually placed the transaction in threat. So, as Kelsey mentioned, exactly what you define in your auction terms is so critical to make your auction process a success. And when you are, whether you are out of business rescue or just in the informal turnaround space or in a business rescue space, it's very important to define those terms so that your seller knows exactly what they could expect, and that your buyer also knows exactly what costs and charges they are responsible for. Another example in Bloemfontein was a farm that we recently auctioned off, and it was valued at approximately 17 million. The valuations that we received the secured creditors and the shareholders, and eventually it sold for 11 million. And once again, what you believe that it's worth, and what if I can refer to a term as the market of general commercial market affordability is of a property, is very important in managing expectations. And I think I'm going to stop at those two examples.
No, great. I think that's excellent. That's two
Can
very
I-
good examples there. Yes, do you want to come in there, Greg?
Yeah, sorry, please, if I can, just again, talking to both Kelsey's points and Gideon's around the issue of liquidity in the market. In a previous webinar, Neil, you recollect that I spoke to Professor Adrian Saville's comments on this. Adrian being the Professor of Business Economics and Finance at Gibbs. And he said for him, the auction platform provides two things. One, liquidity in the market, because your buyers are cash. And you're looking to liquidate assets as quickly as possible. And secondly is you get great price discovery. You start understanding what an asset is worth when you take it to auction. And then, Gideon, just talking to, as a layman, I'm not a business RECSU practitioner by any means, but I certainly remember the 2008, the rapture in the market, the collapse of Lehman Brothers. And remember very clearly that when that crash happened, a lot of these assets went to auction. Their real estate, their art, their financial holdings, they were all auctioned off to recover funds for their creditors. I remember Sotheby's and Christie's were involved in that, specifically on the high value art and the collectibles, and the property was dealt with proper commercial and residential brokers and so on auction brokers. But that just demonstrates how that type of financial collapse, one could probably be mitigated against if you use auction first to bring liquidity to the business during the business rescue process, but how you can get value for those assets when you're looking for rapid asset liquidation. So that Lehman Brothers bankruptcy, I remember, as a terrible time in our economic history, but how auction was a solution to some of those requirements then. And then just very quickly, during the COVID time, specifically as COVID hit, I remember a number of the big listed property funds, the REITs, they were having a lot of problem with sentiment in the market. They were finding it difficult in collecting rent from tenants, servicing debt obligations, and they also needed a solution to liquidate some of their non-core assets. They needed to improve liquidity, service those debt covenants and so on, ensure distributions. And we took quite a few properties over the early stages of COVID to bring liquidity to the balance sheet, allow them to service their obligations and to retain their REIT status. So we've done a fair amount of work with businesses that are also looking to utilize auctions to service certain requirements that they have.
Excellent. Gideon, I see you've raised your hand there. I don't know if you want to elaborate a little bit more on that?
Yes, thank you, Neil. I just want to elaborate, on what Greg said. If I look at traditional selling methods versus where we are in our virtual world today, and what I experience is that, the way auctions are done today, and online auctions specifically, the extent of the reach, the extent of the marketing, drone footage, LinkedIn advertisements, YouTube commercials, it's just far reaching. And I think the old stigma of an auction is, or traditional stigma of an auction, is just liquidating the assets, for what you can get. But these days, it's actually such a important tool if coverage, rather than appointing just a estate agent, with all respect to estate agents. But there's just so much value that companies like Highstreet can also offer, in terms of a disposal strategy. And we must not forget that the daily business of auction houses is to deal with assets, and they've built up a client portfolio, that are constantly looking for transactions. And a lot of the times, engagement and transactions are distributed informally. Correct me if I'm wrong, Greg, but the communications regarding assets that come to the market, can be communicated informally, and the news of assets can go to maybe a list of 100 or 150 interested buyers, as opposed to maybe only reaching 10 at any given instance. So these online or the modern auction platforms, have provided us as practitioners with the flexibility of actually knowing very rapidly where you are heading in regards to this asset. And once you have got a gauge of where you are heading, then a formal process can be instituted accordingly. And this provides a lot of comfort for the company, the practitioner, and also the creditors.
Mm-hmm. So I just want to say to our audience over here, if you've got any questions, please fire away. We're not going to be putting you on the microphone because we might get an interruption. We'd prefer that you actually put it in the Q&A box. There's a Q&A box on the bottom of these. Got any questions, we'll fire away to our team at the end of the webinar. Kelsey, I want to bring you in here. In terms of strategies for and let's talk about Highstreet as an auction house. What strategies do you employ to ensure that distressed commercial, industrial, and residential properties reach their full market potential?
Well, I think Greg is going to jump in on this one with me as well. I mean, obviously, Highstreet as a whole, and under the leadership of Greg, we've taken a decision, firstly, to effectively structure a division that specifically deals with these assets, so that any business rescue practitioner, any liquidator who's dealing with Highstreet knows exactly who they're dealing with. And it's a team that has experience, that has the enough legal know-how, how to navigate the complexities of these deals, because these deals are essentially more complicated than your willing buyer, willing seller. So that was the first step that, as Highstreet, we took in a strategy. How do we make space in the sector, and what do we bring to them? What strategies do we, employ to come into the sector and service them effectively? And that's, as Highstreet, that is what we've done by creating a division specifically that deals with these transactions. We have the know-how, we have the IP, the intellectual, property that navigates the complexities of these deals, so that these deals don't, fall apart, so that these deals don't have any issues in reaching finality and stuff like that. We're able to guide both the buyer and the seller. We, can provide the seller, analytics as to what is happening. Our marketing is phenomenal, and we get a full set of analytics as to how this property is performing. Like Gideon mentioned, our reach in terms of marketing is exponential compared, to a conventional sales method. We get full analytics on that. So we on the back end get full analytics as to how that property is performing in terms of its reach into marketing. What is the feedback from the interested parties? And we're able to guide either our business rescue practitioner or our liquidator through that process, and give them an idea of where the market is. So it's a process from our side that really makes handling the distressed sale. We're able to inform the buyer of all of his obligations with these deals. What are those terms and conditions? What do those terms and conditions look like? What are their responsibilities? As well as guide the seller, be it, a liquidator or a business rescue practitioner, as to, how that property is performing, what the market, is saying to us with regards to value, where they find in value, the difficulties or the challenges they face in committing to the transaction. So I think that is an imperative strategy that we at Highstreet have onboarded. And we are a division that is growing. We're bringing, another team member on soon, so that we have the capacity to handle and service this sector as effectively as possible.
Okay, well said. Great.
Insights?
No, I think Kelsey has very articulately summated what I would have said. The track record of the auctioneer is essential, the competency of its people, and the ability to provide a service as a service provider to the business rescue practitioners. The only thing I would have asked, perhaps that we just elaborate a little bit more on, is the fact that we do tailor make or tailor the solutions of Highstreet to the needs of the client. So in extracting maximum value, it might be not always that it's just a pure auction, a public auction. It might be a hybrid where, for example, we start on a private bid, which is more of a private treaty transaction framework with a closed loop. There is price pressure and tension in the market because people have to offer a price by a certain date. You find out where the market and the price and demand discovery in that first phase might look like. And if we don't necessarily get the right offers, you can move into a hybrid auction phase thereafter for that sunset outcome that Gideon talks about. But, there's also no reserve auctions. There's the hybrid auction that we've spoken about. So we'll always look at trying to put forward the right solution to deliver the best outcome and elicit the best value on those assets.
Okay, excellent. So, Gideon, I want to bring you in here again. Let's look sort of auctions down the line. I mean, we see markets, and we've heard it today, 2009, Lehman Brothers collapse, and we saw all these different things happen, global financial crisis, we had COVID. We've had so many events that have just affected the economy. And it will, I think it was one professor, Francois Verudi, said every 10 years there's going to be some kind of economic correction. And whether it's up or down, we're going to have some kind of crash, if we may put it in that particular way. But how do you see the role of auctions in business rescue and asset disposal changing, say, in the next 5 to 10 years?
Yes, thank you, Neil. I just want to, before I answer your question, connecting what Greg said, a proper auction approach, be it tailor-made or a normal sale process in an auction, is absolutely critical for a business rescue process. But what's even more critical is the defining the process. Just on the definition of reserve price, I think there might be a perception that if an asset goes to auction, it sells for whatever value, the highest value achieved. And in our business rescue processes, that is not the case. The online resources available to the public has just developed to such an extent that there's a lot of information about an asset available. And now I'm referring to previous history of let's say Highstreet or any other auction house. They've got the actual or the realistic trends, what they see in each industry, in each area. And together with that, you've also got platforms like Windeed that have got Windeed values, property valuations, which also give you history of, let's say the past 10 or 15 or transactions, in close proximity to the asset or the property asset. And taking all of this information into consideration, as Kelsey mentioned, one can make a fairly accurate, informed decision or let's say a starting point out of the blocks for the assets. But in the process, it is absolutely critical and more critical that one has got a reputable auction house that you engage with. And I want to move away from the term auction. I actually want to say structured sale specialist. We need this advices from the companies and industry players that do this on a daily basis. And in a business rescue process, you usually have a period before the publication of the plan, and that is in this process, the affairs of the company and the assets are actually investigated and considered, and valuations are obtained. Studies are made, and as part of those studies, thoughts are also put into who can this asset be sold. Must the asset be sold in a whole, or must the asset, be sold in piecemeal? And these type of engagements are, done with a independent property specialist. And in that process, it's also decided, should we go on a private sale, or should we go on a public sale? And obviously the private sale will go its direction, and there's individuals. But then the public sale, what's nice about that is, you've got a standard pack of information that is developed during your development phase of your business rescue. Your due diligence is already there and it's done. So the information that's put out, to a great extent, that is the final independent verified information. And then you go to your auction, and it's not just bargain hunting, because you then place a reserve price on the asset, and also, subject to confirmation. And that's very important, certainty that the practitioners and the company and the role players need, that the action, or that the asset will not just be sold for whatever minimal price it is. There's a structured approach to the whole process. So to get back to your question, I don't think that there's any other process other than a tailor-made, bespoke process, as Greg alluded to, for selling an asset. And this is not just in a business rescue process. This is also in an informal sale of asset. If you've got some property that you wish to dispose of, take it into consideration. Approach a reputable auction company, and they can give you specialist advice on your asset. So it's cardinal to actually acquire the services of an independent expert.
Great. I want to bring in Kelsey. I can just see the time is running away with us here. We still need to discuss quite a few things. And guys, if you've got questions over there, once again, to our audience, please don't be shy. But Kelsey, how do legal considerations such as insolvency and business rescue proceedings affect the auction process for distressed properties?
Well, I mean, we as an auction house we are guided by a lot of legalities that we need to comply with just generally. And then when it comes to the legal considerations impacting distressed properties, we obviously take instruction from our BRP or our liquidator or the bank, and that instruction is imperative. Like, all the necessary disclosures need to be made. So we need to comply with what the court order says. If the court order limits, the buyer's premium that's charged, we're obligated to comply with that. We need to understand any liabilities that come with the property transaction. So what liabilities will be settled, what liabilities won't be settled, so that we can make the necessary disclosures to the potential purchasers. So, for example, rates and taxes. Is that liability going to be covered, or does that liability become, the liability of the purchaser, so that they can factor that into their valuation process of the asset, obviously. With business rescue proceedings, I know that, when a business is in formal business rescue, there is a moratorium on debt enforcement, and we are obviously there to try and get maximum value for it. But we also have to comply with our instruction and our mandate from our business rescue practitioner. And that is imperative, because their mandate with us is based on their business rescue plan approval, what is set out there, what has been approved, and we have to, make sure that we comply with their mandate. We have, obviously, we've got legal and regulatory things that we comply with as an auction house. We need to make the necessary disclosures, because if we don't, as brokers, we can be held responsible should the necessary disclosures not be made, and that, you know, affects the purchaser, because the purchaser made it, you know, bought that property, or, you know, purchased that property without knowing the necessary facts and without us providing the necessary disclosures. I don't know if Greg wants to hop in and provide any additional insights on this.
No, again, from my side, Kelsey, I think very well answered, well qualified.
Okay, so Gideon, let's just extending on what Kelsey was saying. How do auctions play a role in the broader context of business rescue and also restructuring, especially when companies are facing liquidation or financial distress?
Let me think how I want to answer you, Neil. You know, firstly, going back to the definitions of business rescue, you know, if it's going to be a trade-out scenario, you know, which trade-out scenario incorporates a restructuring of the loan or lending facilities. You know, your secured lender, before you approach them, there needs to be a realistic understanding of what is the integrity of your asset. You know, if there's lease agreements, what is the integrity of your income, and just generally the financial position. And if it is that the success of a business rescue is as a result of perhaps a restructuring of a loan, where you propose that your lender takes a well, firstly, either restructures, maybe extends the term, reduces the interest rate, or actually just takes a haircut, you know, then that is an important consideration where you need the specialist knowledge of you know, specialists like Highstreet. Alternatively, if you're going to go to the market, you still need to understand what is your calculated market value, what is your calculated fire sale, and then the third aspect is what is the trend in the area and the demand in the area. You know, it doesn't help that you do a calculation of the market value. You know, if you are to be in a position to have a 3 or 5 year or a term lease, but your area or around you, you know, is in distress, and a realistic value is maybe 50% of the market value. You know, and as practitioner, it doesn't help that you include this information into a business rescue plan, and then you under-deliver when you actually execute on your auction process. So consultation, once again, either or strategy with an auction house is just cardinal to have an accurate restructuring plan on the table.
Okay.
Neil,
Thanks for...
if I just, I mean, Gideon is very technically proficient, and I'm sure everybody listening in on Gideon is learning a lot. If I take a more basic approach from an auction perspective to talk to those that don't know much about business rescue, ultimately, what do? We help save a financially distressed company to avoid liquidation in a couple of ways. And we've spoken about some of these during the course of the webinar. But selling of non-core assets, obviously, first port of call. If they sell any real estate, machinery, any inventory, they can raise working capital. So that's one of the elements of, you know, staving off a liquidation. We talk about generating quick liquidity, and we've spoken about speed to market. So you don't have to have long negotiations with buyers. We provide an accelerated cash injection that can perhaps help sustain operations of that business that is looking at a turnaround. We can attract investors. Certainly, we have the database, and we've spoken about reaching all those eyeballs, but we can work well with the business rescue practitioner to bring in perhaps strategic buyers that might be interested in parts of that business. You know, and just by buying off something, you can, again, bring liquidity to that business that is in jeopardy. And then, of course, the creditor confidence. Because we provide fair valuations and we go out and we bring the right offers to the market, it allows creditors to recover what we believe is optimal value. So just 4 pillars of perhaps what we do in talking to that financially distressed company before it moves into a liquidation scenario.
Okay.
Yeah,
So
if I can just hop in quickly as
please
well.
do.
I think,
Please.
I mean, with a business rescue, I mean, obviously their goal is to save the business and for the business to continue trading, and sometimes the company needs liquidity, and the best asset to sell off is the property, but we can structure sale and leaseback where, the company in business rescue potentially then becomes a tenant without having the cost of actually relocating. We can find investors that are happy to take on an asset like that where it's sale and leaseback, and we negotiate what that leaseback period looks like, and we structure that whole deal so that effectively that it's in the benefit of both the business in business rescue as well as the purchaser, and bringing liquidity into the business rescue in order to return that company to a stable position.
Okay, great. I'm just conscious of a little bit of time is running out. There is a question that I'd like to deal with now. So how I'm going to handle it is, let's deal with the question, and then I'm going to ask each one of you maybe just to give your final wrap. But in that final wrap, you can add elements of, just ending off, leave people with something that they can move forward on with you, whether they're in a buying situation or whether they're on the distress side of the transaction, and how we could take it forward with you. So first of all, let's just deal with a question. It's from an anonymous, and it says the scenario of agents and having 20 properties on their books is something that is no longer factual. Experienced agents therefore have to be creative in finding value, such as consolidating various sellers to give developers options of larger projects, or offer JVs or options, etc. Auction houses seem to take properties, market for a month or two, and move on. Am I wrong? Who wants to have a crack at that? Greg, perhaps? Or Gideon?
No, not at all. Not at all. Look, the benefit of an auction is you have a time frame in the market of 4 to 6 weeks. Perhaps you get transactions closed prior to auction on a pre-auction offer. But the benefit to the seller is that you have a specific date to talk to. Everybody has to compete on the same terms, and typically the offer is made on terms agreeable to the seller. But I can tell you, Neil, let's be pragmatic. You don't close every deal on auction.
Yeah.
You don't always find the right buyer. You don't always necessarily find the right value. Those are real, that's being realistic and honest about the marketplace that we work with. And I can tell you, we've done deals many, many months after an auction date has come and gone. We continue to engage with all the buyers that might have engaged during the campaign or after the campaign. We will deal on private treaty, on structured basis thereafter to try and close. We are closing deals many months in some instances. So it's not as though the auctioneer takes a mandate, perhaps fails to get a result on auction, and then leaves the seller to his own endeavor. We are highly motivated to try and close a transaction for our seller, even if it takes longer than the campaign that we are mandated on. And we are closing deals in the months following an auction in many instances.
Excellent. I think good answer. So Kelsey, we've got probably about 5 minutes to go. So what I want you to do is maybe just end off with maybe telling us some of the key trends you're seeing in the property auction space with the rise of online platforms, real-time bidding, and then just leave the audience with some parting shots, working alongside yourself in the TRI department at Highstreet. So over to you, your closing. Ladies first.
Thank you. So, I mean, online platforms across the board, not just, specific to to auction per se, but your online platforms that were brought up by Gideon, the likes of Windy, Lightstone, and the access to information is just far greater than it ever used to be. So both our buyers and our sellers are far more informed when it comes to auction and the auction process, because of the availability of information that there is out there. And then you start looking at our ability to, stream our auctions, have real-time bidding. We have obviously our own app. We stream online across the board, Facebook, YouTube, we're there. There's no ways to miss, and there's no difficulties in accessing or having access to, partake in an auction, even if you're not available to be at the venue on the day. So the shift to online platforms obviously has been greatly beneficial, not only for us as auctioneers, but for buyers and sellers. They are able to partake even if they are not able to be at the venue on the day. So there's increased accessibility to auctions because of these online platforms and real-time bidding. So we've been able to break geographical barriers, making globally, having international investors bid on the day of auction. They are on our app or they are on the phone with us. They are able to watch what's happening on the floor, and gives them confidence to transact. So that's one of the huge benefits. The convenience and flexibility in terms of real-time bidding, allows people to participate. They're up to date. There's no delay. There's no, it's transparent. It's transparent, and technology's allowed us, to be transparent when it comes to its instantaneous updates. So that also allows us to expedite, and it increases the competitiveness of the bidding, because we now have a larger buyer pool being able to participate because there aren't these limitations. So we're able to bring as many people to the to the table as possible who are interested in investing in the asset. It's the real-time bidding accelerates the auction process. It's just allows us to work through these transactions quicker, in a more transparent manner, and it obviously increases the competition between the buyer. And I think it's important that also our buyers have insights. They have insight. They have, these people that are, often investing in properties through us. They have full insights into the property due to their own research. So they will also look at market value. They will also determine, where value lies at that asset, and come up with some form of determination as to what kind of cap rate they're willing to apply. And so just online platforms as a whole, and access for us to be able to provide real-time bidding and access to our buyers and sellers in terms of streaming has been beneficial across the board for everyone involved.
Great. That's Kelsey Barlow. She heads up the TRI and development with Highstreet Auctions. Wonderful having you, Kelsey. I'm going to ask Gideon to give his closing parting shots.
I think in closing remarks, as Kelsey said, a sale and a leaseback arrangement is a very possible, feasible arrangement. If you have got equity in your loan facility and you need liquidity in your business, that's a very important consideration that must be made. And do your homework. Don't fear to consult. And it can be a very up until where you go up to auction, a very private process. Nobody needs to know that what strategies you are considering, and that is the professional service that your auctioneer provides you. And test the market, test the value of your asset. Rather know what you don't know. Know that your financials are realistic. Cash is king. So do your homework well and get independent specialist knowledge. Thank you.
Excellent. That's Gideon Slabbert. He's Director at Corporate Business Rescue, also a certified business practitioner, and he's also the CEO of Turnaround Association of South Africa. Thank you very much, Gideon. Wonderful having you. And then last but not least, Greg Darts. Greg, do you want to maybe just give us your summation, your final parting shots to the audience, maybe of this webinar? And thank you for also your wonderful participation as well.
Thank you, Neil, for coordinating this webinar as our anchor, and your insights. Kelsey, for joining, and all of your valuable input as head of our TRI. And Gideon, I think, I'm humbled firstly by your affirmations, and secondly, thank you for your time and incredibly well and competent view on the business rescue space. Neil, just one thing, Kelsey was talking about online and the digital online space for auctions. Absolutely right, everything that she said. One thing that we just want to impress upon everybody is that we really adopt a hybrid auction model, specifically where we talk to broader participation of either and including people online and in person at our auctions. You get a far more dynamic environment when you've got people on the floor bidding against those online. That engagement typically finds us unlocking far better value in the marketplace. But all of the benefits that Kelsey spoke about online is absolutely on the mark. To talk to final comments, as a director in an organization, I think I would just impress upon any director in an organization that might be going through any challenges, business challenges, that they don't leave the decision to engage with a business rescue practitioner until it's too late. I think sometimes directors might feel embarrassed by the fact that they're in that position where a business rescue scenario might need to be considered, but rather take that bold and courageous decision and not leave it too late when it becomes a decision out of your hands and a liquidation or insolvency decision might have to be taken. And then you've lost a lot of the value in the business. So certainly engage with your business rescue practitioners early and work with them and service providers such as ourselves to help you in that distressed phase.
Wonderful. I think it's a good way to end off there, Greg, and good advice. Got to take action. We can't just sit back and do nothing about it. Please reach out, and clearly I can see just by talking to you guys, you're the approachable ones, and it's so important, in this distress time, to approach and encourage everybody here on whichever side of the transaction you are, whether you are an investor, whether you are sitting in a distress, is to reach out to the team here at Highstreet Auctions. So that was ending off, of course, with Greg Dart. He's Director of Highstreet Auctions, Gideon Slabbert, and Kelsey Barlow. Wonderful. Thank you very much for all your contributions and sharing everything, your valuable insights. And I'm certain the attendees, and there's still around about 30 of them that are still sitting here, they've walked away with a wealth of knowledge to guide them in their property businesses and also in their business as well. So before we wrap up, I want to remind you of our next upcoming events. Firstly, don't miss next week's auction. Highstreet has got an auction. It's taking place live and virtual, as Greg said, on Thursday, the 27th of March at 12 o'clock at Bryanston Country Club in Johannesburg. And inquire about that. If you want to inquire about the properties on auction, if you want to attend live, you go to the highstreetauctions.com website to register. And you can reach out to them or anyone of the team, or reach out to info@rei.co.za if you need some more info. And then, of course, we have 2 additional events, webinars next week. That's Tuesday, the 25th of March, 7 o'clock. We're talking about South African property rights and how to bolster your cash flow and property portfolios. You just go to the rei.co.za website and you click on the links there under the events. And then secondly, we've got next Thursday, we're back to our normal Thursday slot, which is Thursday, the 27th of March, 12 midday smart investing in residential rentals, strategies for success. So once again, just go to the rei.co.za. Once again, huge thank you to the Highstreet Auctions team and to you, the attendees who joined us today. Your engagement and insightful questions also made this really valuable. And these discussions are really making our webinars impactful. So it's so important to give us your impact. So we hope you walk away with some real actionable insights, fresh perspectives to elevate your businesses, your real estate strategies. This is Neil Peterson from REI signing off alongside our expert panelists from Highstreet Auctions. Until next week, Tuesday and Thursday, and of course at the auction with Highstreet on Thursday, we wish you success in your property journey. Happy investing and goodbye, everybody. Thank you for joining us. Until next time. Thank you.